By the way, Pete, you know what I got?
Oh, God. Jared, it's the end of the earth. The guy's got his clapper.
Nice, nice.
So does that mean you're still going to be doing this or no?
Of course.
It's the way we got to kick it off every time, man.
Well, we're going to have some fun, Pete.
Yep.
It's my birthday.
Nice.
So thank you, by the way, Pete, for those wishes of healthy and happy birthday. It's been that way already.
Nice.
And, for people that were disciplined, boy, we've had a couple pretty good trades this week already.
Yeah.
And man, the puts are paying dividends already as the market just kind of, oh gosh, it's a tough market out there, folks. But as promised, Pete and I are going to bring you our take on some of the top stories and the stocks around those stories, as well as, of course, unusual activity, not just macro BS on a down 350 point day for the NASDAQ. That's 3%, folks. Ouch. All right, Pete. So what is it? Is it the 10-year?
Oh, boy. John, I think it's a combination of a couple of things, but you know what? Let's be honest. We talk about this all the time, and there's a big clown squad out there who wants to talk about, oh, well, this is specifically what it is today. That's why it's going higher. This is what it is going low. That's why it's going lower. The reality is this. The direction has been lower. Why is that? Because of the 10-year flying up towards 4%. Yes, it's off of that level now, but that's still the concern. And yesterday we got a little bit of a reprieve. Today they're right back at it, and we're seeing that right before our very eyes. That's my macro minute from me. How about you?
Well, I got 24 seconds left, and I'm going to say, Pete, it's also Great Britain or the UK.
Yep.
They are in a world of hurt because they want to cut taxes, and the Bank of England wants to jack up rates, and this is going to be something that's really interesting, Pete.
Yeah.
Their currency's falling apart. Now, it bounced back from like 103 to the dollar to 110, but that's going to be short-lived, I think. They're going to experience a lot of pain. Well, true to our word, 1 minute, that's it. Pete, what about the Porsche IPO? I know one of our friends, Steve Weiss, and this is not to give Steve Weiss a lot of crap. Anytime you put your butt out there and you say, hey, this is what I think is going to happen, we have some respect for you. So this is not like us ripping on Steve, just so you guys know. But the Porsche IPO didn't exactly go the way people thought it might be. I mean, Porsche's listed now as a separate company. They raised money for Volkswagen, which it was spun off from. But man, this is not a great environment, and they hoped it would be.
Well, when you're down 13% on our IPO, when you started off positive, this is a nightmare. I mean, an absolute nightmare. And they're so stretched, John. A lot of people are concerned about the C-suite and what's going on with that. So those are some of the issues. By the way, VW, another name that a lot of people have talked about in a positive way, it's down 41% year to date. Let's just compare that to Tesla, because everybody wants to be an EV stock now. Everybody's an EV. So Porsche's an EV. You got Volkswagen, you got them all, right? Well, Tesla's down 22% year to date. Not good, but a heck of a lot better than what we're seeing right now from VW, and clearly what we're seeing out of Porsche as well. So I think people have to be very smart. They've got to make the decisions on what is the reason why something would outperform the other. I think it's all the data that Tesla has collected on top of the EV side of what they are. Elon Musk has really done a magnificent job. He's done that for however many years now, and he continues to be the leader, and nobody has been able to dethrone him yet. So I think that's why we are seeing such a disparity of the haves and the have-nots. And right now, VW and Porsche have not.
Right. And Pete, I'm going to segue into CarMax.
Sure.
Because obviously CarMax probably sells Porsches, but it's probably this much of what they sell, Pete. It's probably a lot of Fords, Chryslers, Toyotas, Camrys, all that kind of stuff. But, they sell a little bit of everything, but apparently not nearly as much as everybody thought, because they were expected to sell about $8.5 billion worth of cars and instead missed that by $400 million. They came in at 8.1 billion, and stock is taking a severe hit because of that.
When you say severe hit, I think that's pretty accurate because the last I looked, John, I don't know where it is this second, but it was down 23%. I mean, that's not only severe, but how about the fact that it's at a 52-week low? I mean, we're talking about a stock that's been absolutely just slaughtered to the downside. Now, again, this is really part of what was going on within the pandemic, right? Everybody, well, I'm going to buy a used car because I can't get the new cars because they don't have the chips and all of the rest of what was going on, supply chain, everything that was the excuse. Well, we're seeing a stock that now we've come out of that. We are seeing inventories getting a little bit better, and that's not good for the used car world. And so when you get your earnings out there, John, and you're just barely better than half of what they were expecting, 79 cents. I think they were expecting what, like $1.40 or something like that. Ouch is all I can say. That is awful. 52-week lows. That's exactly where the stock probably should be right now. But it's definitely something to keep an eye on these levels because, John, they will bounce back. And now they're just getting absolutely slammed for all the right reasons. But I still think it's a name to keep on your list. But it's affecting GM, Ford, everybody.
All right. And I'll say that it's getting down to a level now, Pete, where I'm starting to rub my hands like this and saying, I'm getting ready to buy it here. So I'm not a double thumbs down on this one. I'm like getting ready to start buying. All right. What about Peloton, Pete? Does this one ever get cheap enough to have you get interested? I mean, they're going to be selling these Peloton clothes hangers because that's what Pete called it, the world's most expensive clothes hanger. And he did that, by the way, when it was a triple digit stock. Now it's $7 or something like that, Pete. It was a pandemic darling, and now it's a disaster.
It's the greatest example in the world of guys who really just don't understand it. And the part I don't understand from my perspective is I'm a 20-year-old. I get it. They hadn't gone through this cycle. You're much over 30, John. This is that common cycle that happens. Cycle, get it? Happens all the time. Yeah, I mean, because we've seen it time and time again. You and I watched our father. We watched everybody else do this over all these years, John. About every decade or less, there's this run for, hey, we're going to do this from home. The problem is nobody wants to do it from home. Nobody wants to be by themselves. They want to have the influence of others. There's always that ego factor that happens when you do go to the gym. And for all those reasons, that's why this was a $150 stock like 2 years ago in the midst of the pandemic. By the way, in the last year, 52-week high, $99. Where are we today? Like you said, $7. I mean, we're talking about $7, John. So this is a very expensive clothes hanger. And I tell you what, Dick's, I think, is doing the right thing, trying to do something here. But $3,000 for the new rower, please. This environment is not made for people that are struggling already to pay $3,000 for a workout instrument. Not going to happen. Not a good decision by Dick's, in my opinion. And I think the stock still could go even lower.
I absolutely agree. It's a luxury item that everybody who had that kind of disposable income, I think, has already bought it, Pete. Yes, it's great to get out there and get your heart working and all that kind of stuff. But you can also do that by walking, by running, by riding a real bike outside or going to a gym. So I agree, Pete. This is one that I think is still a don't touch. It's another 52-week low today as it just broke 7, Pete, and it's trading over 15 million shares. People are hitting the exits with both hands. How about Apple? Is it time to hit the exits, or on a pullback like this, do you buy it? Bank America just said they took it to neutral because instead of asking for the 6 million more iPhones that they said they wanted their manufacturers, Foxconn primarily, to make for them, now they've said, nope, 90 million phones is enough. We're not going to need 96 million. What do you say, Pete, on a big 5% decline in the stock today?
Yeah, I think, John, that we all understand what Apple is. We understand the percentage of what the phone means to Apple. But I think what people don't understand and look past oftentimes is, look, it's not just about the phone. The phone is huge. We understand all of that. But that also isn't where they make their most money. They make their most money in all the other verticals. Now, here's the interesting part. Whether it's semiconductors, Sorry, Intel, you're gone. Apple does their own there. But when you look at all their verticals, John, that they've got outside of the phone itself, they're either number one or they're number two in that category. So for that reason, I think you still got to look at Apple and say, you know what? This is a bit of a gift. Whenever you see these sell-offs, now it doesn't mean we're at the low, but I'm just looking at it on the macro. If it sells off even more, and the market certainly could, I think Apple could go a little bit lower. But I'm just rolling down my calls that I sell against that stock, John, just like you are, I'm sure. But I'm rolling them down a little bit closer to where the stock is now, higher implied volatility, so I get a little bit more money and create my own dividend stream as I'm waiting for some sort of recovery. I like the vertical still anyway. I love the margins that you get there. It's the phone that obviously everybody's talking about right now. It's not the other stuff. So if it was the other verticals, I'd be a little more nervous, but that's not the case.
Right. I did just what Pete said, folks. I was short the 160s. I rolled down to the 155s. I rolled down to the 150s. What does that mean? That means I'm collecting rent by selling each of those strikes. Now I'm at the 145s in October, Pete, primarily on those right now. And, the stock is a long-termer. I'm going to hold on to it. If we go into the 130s, like 135 on the lows and things like that, I'll roll down to the 140s, Pete, meaning I'll buy back my shorts, put out those 140s. That's the way I'm playing it. I am not one of those guys that's dumping the stock here, especially because I'd have, just like you, Pete, a pretty big capital gain on that. I'd rather hold on to this one and just keep renting it out month by month. All right. Let me give you a quick one, Pete, on the home builder side. So KBH, home builder, bearish put roll was the unusual activity that our guys cited today. We use our heat seeker algorithm to find these unusual large purchases. And if it's a large purchase of puts, could be protection. It could also be a bet to the downside. And when they buy a lot really fast, we say, I don't care which it is. They think this thing could be going south in a hurry. So they bought the October 22 puts with the stock trading at 26, Pete. Why? Because the 30-year mortgage went up to 6.8% today. Again, if you're somebody who's lucky enough and smart enough to lock in a mortgage at under 3%, pat yourself on the back. That's a great move. But for all the people that have adjustable rate mortgages, for the Federal Reserve and everybody else now who's having to pay much more money on deposited funds, this is not good news for the home builders. I can guarantee you that, Pete.
And I'm going to jump on the next one, John. It's an ETF. I'm not always a big fan of those, but we've seen so much activity of late. And I was noticing this last week when we had RebelCon going on. Individual names, sure. But we're seeing so much in the ETF space that I have to comment on this. And IWM, and we've had some success in the past on this one, but they are buying that. By the way, that is the Russell 2000 ETF. They are buying puts right where the stock is. Call it 164, 165. They're buying the October 164 puts. They bought 26,000 of these, John. And along the way, they're also spreading those off. And I like that because I think that's a smart trade. What they're doing is they're buying the 164s and they're selling the 152 puts that are even lower. What does that mean? They've got a spread on. It's a $12 spread, and they're paying about $3.50 for this $12 spread. It's right at the money. If we continue on this downward surge, then these things really could start to develop and turn into something pretty big. But I like to see what that risk reward looks like. They've already got that out there in front of me. It's at least a 3 or almost a 4 triple, a quadruple. So that's what we're looking for. I like this one a lot. The individual name itself, the 164 puts, those are going for about $5.40. A lot of money. That's why they're spreading those off to get a little bit of relief. I like that kind of trade. Pretty aggressive trade, 26,000. And oh, by the way, they've bought more puts today as well in the IWM, not too terribly long ago. So this is one where they're almost kind of doubling down, John.
Yep. They've been buying these puts, folks, since the IWM was over 200. And as it's been diving, they've been rolling down to the 175s, the 170s, the 165s. Now, as Pete said, they've rolled down significantly, and 26,000, that's 2.6 million shares potentially short at that strike. And then they have all the downside until they get to the one that they sold down there in the 150s. All right, Pete, Aaron Judge, just got to say, Triple Crown winner, it looks like.
Yeah.
That means batting average, RBIs, 61. He ties
Oh.
Roger Maris for home runs. I think he's going to beat him. He's got 7 more games, Pete, to do that. And what a phenomenal athlete. This is going to be one of the biggest contracts in history.
Oh, yeah. And Roger Maris Jr. is sitting there, and he's so happy about it, John, and he was congratulatory. I mean, he absolutely loves Aaron Judge for all the right reasons. He's a young man. He's a total stud. He's this big animal of a freak of a dude. When you stand next to him, it's scary how big this guy really is. So it makes some sense that he can hit the way he does. But everything that he does, he seems to be able to do at a high level, John. It's absolutely incredible. Congrats to him. And I think he will, I think over the next couple of games, what has he got, 5, 7 games left? He might
7.
hit 2 or 3 more now because the pressure's kind of off of him. And if he does and he sets the record, he is the record. Because all these other clowns that were injecting themselves every day in the locker room, the hell with them. That doesn't count. I hate the fact that we glorify some of these guys, and some of them are color commentators these days in football and baseball and all these other sports that cheated. They outright cheated, and it's a damn shame. So I'm happy for this guy because he's the real deal. I love what he's doing. It's really impressive. John, that kind of leads us into the into pro football a little bit.
NFL.
Yep. We got to hit this one, John. So tonight, it might be the best game of the entire weekend tonight. And the reason I say that is you look at the AFC to start the season, and I see a little bit of slowness starting with Cincinnati. There's something going on. They're not quite perfect just yet. That's okay. But Cincinnati and Miami, it's going to be a prime game, John, which is going to be a little bit of a headache for people like me that, depends on what you've got and how you know how to work your TV and everything. But it should be great because Tua's absolutely on fire. And then you look over across the way at Burrow, and he has not been on fire. Maybe tonight is his night. Who knows? But he's been a little bit of a slow starter. He's thrown too many interceptions. All of them were against Pittsburgh. He had 4. Terrible game. But it's interesting, John, because the one thing I like that's happening in the NFL is something that these GMs have finally figured out. It took them a long time. Why not pair up my quarterback with a receiver that they were familiar with from college? You see it with Jamar Chase and Burrow. You see it with Tua and his receiver. There's like 6 different teams that you could name right now where the quarterback and the receiver played together in college, had a great career together. I mean, Devondre Adams is a great example with Derek Carr. When you look across, there is all these relative, where they've got that comfort zone. And I think that's really big, John. What do you think about all of this? Does it make sense to you as well?
Yeah. And Pete, that was so uncharacteristic of Joe Burrow to throw those picks in Pittsburgh. So I guarantee you he's looked at film. He's seen what he did wrong. It's not just you threw the ball to the wrong color jersey. It's like, okay, what did I read wrong about that defense? And did I look too long in that direction? Did I stare him down? Do I need to look off a little bit and then turn and throw to the left? Probably. And I think Joe will not make that same mistake twice. Meanwhile, Tua, as you say, Pete, one of the best there is out there, and he's totally caught fire. His receivers, he's hitting them right on the hands, which is where you want to put the ball. You put it too low into the breadbasket, yeah, they can catch it with their hands, but I like that he's throwing it right here, Pete. That's where you see most of those catches. So I think it's going to be a great game. What else you got in college football?
Yeah, college football is pretty fun because I think there's a lot of great games. There always seems to be, especially this time of year when you finally get into the real season, John. But the one that stands out to me is really interesting because it's Kentucky. They're rated number 7. They're 4-0. They got Mark Stoops as their coach. This is not basketball. This is football. They're number 7. Right. So that's pretty amazing, really. Well, they got Ole Miss. Ole Miss is number 14. Both are undefeated. They've got Kiffin on the other side of the ball, who, by the way, might be getting a phone call from Nebraska soon to see what his interest might be, along with the Kansas State coach. He's going to definitely get a call to see what his interest might be in Nebraska, but we'll see. But I think this game is going to be great, John, because Ole Miss is out there and they've got their own style. They run the football like my Minnesota Gophers, and they run it right down your throat, and they keep on doing it. They're averaging 280 yards on the ground per game. They are absolutely on fire with this offense. not throwing the ball very much. Kentucky, on the flip side, they can't run the ball. They throw the ball. And that's what's got them there. They're very exciting to watch. But I will tell you this, a running football team who can control the clock has a huge advantage, in my opinion, in games. And I think that's what the Gophers look like right now. I think that's what Ole Miss looks like right now. They can run the rock, and it's going to be a really interesting back and forth. The interesting part also, John, they're number 14. Oh, by the way, they're favored by 6.5 going against number 7. Gives you a little bit of an idea of those that run the ball probably have a lot better opportunity to use up that clock and take advantage of the other team and wear them down. Where do you stand on this one?
Well, you've said it before, Pete, but if you control the clock, if you have 35 of the 60 minutes, or maybe even 38 or 40 of those 60 minutes in a football game, you're going to win, unless you can't put the ball in the end zone and you have to take field goals. But when you're pounding the ball like Mississippi can do, it's just like what I watched when K-State just tore up Oklahoma. And that's not a bad Oklahoma team, but those big guys up front just ripped holes in that defensive front and the linebackers. And they were making tackles. You know, the D-backs made most of the tackles there, Pete, at Oklahoma last week. And that was a home game for the Sooners. So I think this is a little bit of lack of respect for Kentucky, but it's also a recognition of what you say, Pete. Can those defenders stack up against those big road graders that are going to be coming at them? The answer was no for Oklahoma versus K-State. We'll have to see if Kentucky has, you know, enough stunts that they can run to basically shut this thing down, because I don't know if they've got the size to shut these guys down.
And John, I would just add to that, when you're a running football team, you see it in practice. You understand it. You're built for it. The problem becomes when you are a running team, or a passing team rather, and you need to run the ball, or your defense can't stop the run, that becomes a huge problem as well, because they're built to defend the pass. And meanwhile, these guys are running the ball. So there's a lot that goes into that. And I'll tell you, Joe Kleiman is the coach at Kansas State. You're right. That little running back, he can hide underneath those gigantic offensive linemen, those road graders, as you called it. And I'll tell you what, Kansas State's kind of a fun team to watch, because when's the last time? It's been a while, except for the fact that this guy's been there a few years and building and building and building what turns into a very mean, big running football team. I tell you what, you got to love it, man. It's what makes college football so much fun every Saturday, or sometimes Thursday or Friday.
Yep. Well, folks, again, he's Pete Najarian, his handle at Pete Najarian on Twitter, and I'm John Najarian, Jon. My dad was with an H. But we will be back Monday with more Rebels Edge. I'll be back with 3 p.m. today, and make sure you check out Pete's The Take at 10:30 a.m. every business day. We'll see you soon, folks. Thank you for joining us.